Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, we've got a really interesting interview with the team from Swarm. If you enjoy this sort of content and you want to support the channel, mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video. And don't forget to jump in the Discord. It's absolutely free to join. There's over 5,000 people supporting one another navigate this tricky crypto space. And it's a fantastic community to immerse yourself with. It's absolutely free. Link is in the description. Right, let's get down and let's meet the team at Swarm.
I think we're probably best to start with an intro. Would you mind just sort of introducing yourself? Yeah. A little bit of background.
Yeah, so 𝗕𝗘𝗪𝗪𝗧, co-founder of Swarm, together with Philip, obviously. And yeah, my background is kind of a crossover between tech and finance. Yeah. So I built two software companies pretty early on, and then I rapidly switched to venture investing. Okay. So I joined a fund in Stockholm. I'm from Sweden, and kind of worked on their portfolio. And yeah, after that, I actually was managing a venture capital fund as well, early stage in Sweden. And yeah, invested in a bunch of companies, some of which we relocated to Silicon Valley. So in 2012, I moved to the Bay Area, basically, and stayed there until, well, just pre-COVID, 2019, moved back to Europe. And so while in Palo Alto, I met Philip, and that's when we started Swarm.
Sounds good.
My name is Philip Piper, almost identical from different angles, so tech and finance. Started off with Deutsche Bank and Allianz Group to do sort of, private equity and portfolio management. But then actually went to found different companies in the data/advertising space and the media space, but also then in 2017 just looked at a bunch of stuff actually in the decentralized space, which is the broader nature of precursor of blockchain in some ways. Yeah. And then sort of stumbled into the blockchain space, and we were looking at stuff, and what we got attracted to was the immediate settlement nature of the blockchain. Actually, the cryptocurrencies came later, but
Yeah. That sounds good. And I guess what's the backstory behind Swarm, and what is it that Swarm is, just for anybody in the audience that doesn't already know?
Sure. So we, given the nature that sort of immediate settlement was something interesting to us, and sort of our backgrounds coming from partially sort of technology and finance, the ambition grew pretty quickly to actually look at, what does it take to use this technology to improve the financial ecosystem? And in extension of that is basically sort of what to do with actually tokenizing securities. Yeah. So we started off by engaging in a previous project, Swarm, which, basically sort of had that ambition since 2013-14. And in 2017, we started to help out and, build together with the rest of the team, and it was a DAO at the time, sort of a premier platform for doing sort of compliant token offerings at the time. Not the sort of en vogue thing to do back then, but we found it compelling actually because, we obviously saw a lot of things in the primary issuance side that needed to be solved. And then sort of it became evident that sort of liquidity was always the big thing to challenge and to solve, because why tokenize something if it's not tradable, right? Yeah. And so, we then actually sort of went and cheered for others, T0, Open Finance at the time, and so forth. But it also became evident that actually the American landscape was a very, very tough nut to crack on that one, and it was not really evident that it would make enough progress. So we found that that Europe had a much more forward-leaning stance on this. Suddenly, out of nowhere, Germany came along 2020 with the amendment of the Banking Act, and we went right in and basically sort of came to where we are today.
Yeah, sounds great. So I've been on the website and I've been looking at the products that you offer, and I saw compliant liquid staking. What is that, just for the audience?
So the idea is that, it's quite complicated to kind of get exposure to staking if you want to do it certainly through a regulated counterparty. But in general, just kind of, setting up wallets on each of the L1s, and then you kind of go from there to converting into that, whatever that currency might be, and then staking that currency, and then, whether you're operating the node or you're using one of the providers, etc. To do that across multiple blockchains is actually quite complicated. So our thinking was that okay, so let's abstract that one layer up. And basically, so we built a product suite on Polygon, which allows you to basically use USDC to deploy capital into staking nodes of basically ETH, AVAX, Polkadot, Near Protocol, and Solana. And so what that means is basically it becomes super easy to just construct a portfolio across like proof of stake as an investment theme. And then you just kind of decide, okay, I want to have this allocation across that portfolio. And it's become, because it's all on Polygon, it's very easy to kind of reallocate and rebalance that portfolio. So that was kind of the thinking behind that product. And then, so, you know, we partnered up with a couple of node operators to make that happen, where like Blockdaemon is one of them, and they're like super big in the space. So we thought, you know, that's a reliable partner. And then the way we built the processes was also like by using kind of institutional custody to hold the staking positions. So, I mean, it becomes very important, like because once you stake, you receive a staked token from us to say, you know, you own a certain portion of that staked, whatever that total AUM is, as part of your self-custodied holdings. But then also the actual rewards from the staking nodes end up in like an MPC vault on Copper. So that becomes like an institutional grade custody environment. And then that was like, that's how we built the process in order to make that like auditable as well. And not only from like actually knowing that you have self-custody of your receipt token from us, but also that you can go in and click through and kind of see on chain what has actually happened. So that's, and then the other part, which is like the liquid part of that, is basically it allows us to either, you know, support redemption, which is then, you know, depending on which blockchain it is, like, you know, for Polkadot, it's like it takes 28 days to get your coins back. So because of that, we also created AMM pools and a DOTC contract that allows you to kind of get out of those positions faster than the underlying blockchain would allow.
Yeah, that sounds amazing. Sounds good.
And I'll just add something to that, because I think that it's worthwhile to say, like, leave out the speculative element of cryptocurrencies at this moment in time, which is not looking favorably, to say the least, right? I think what we're seeing actually in the institutional side that we're speaking to is actually there is some consensus that being built actually within the big organizations that sort of a sort of permissionless infrastructure can service the needs going forward from an institutional side. So if you have that conviction as an organization, you actually know that some composition of infrastructure will play a role in whatever business models will be done on that basis going forward. Which also means that a lot of institutions are considering to say, well, if we are the facilitators of that value being replicated onto an infrastructure, well, we want some kind of piece of that. And we need to build towards that. We need to make them not have to know what a wallet is, what a sort of a staking validator is, how to validate something, maybe the risk of actually where the asset really resides, but actually make it such that these are very clearly differentiated levels within the product that then actually with the full disclosure can be fully understood by the participants. So it is about actually sort of servicing this group of, you know, future users of blockchain infrastructure with that kind of, you know, ease of use.
Yeah. Future proofing is probably, with like the mainstream coming in that aren't in the space currently, right?
Yeah. And part of that also kind of we're supporting by creating an index for a bunch of like the basket of POS networks. So it makes it like super easy to buy into. Well, we already seen that with the DPI token and other kind of like tokens that are out there. So so it kind of makes it very easy to buy into this thesis, which is basically we think blockchain is a big thing, you know, except for Bitcoin, everything else is pretty much proof of stake. Here are the proof of stake networks. Let's buy into that. And so that's kind of what we support.
Excellent. Obviously, it's hard to sort of step away from everything around FTX, the collapse of FTX. What are your thoughts on sort of the space currently in regards to how regulated it is and the future of regulations within the crypto space? Be interesting to get your take on that with all your experience.
That's a very broad question.
Yeah,
it is. But let's kind of maybe try to address it from a geographical point of view, right? So, you know, like Philip said, I think, you know, the reason why we went to Germany was because it's the first time we've seen a credible jurisdiction actually be very clear about how they want to deal with this. So we're just like, okay, let's go there, because that made sense to us, and it's just and it's not like one of the small countries that would be like questionable from a jurisdiction point of view, but it's actually like, you know, one of the major jurisdictions in Europe. And, post Brexit, we thought that was like the best place to build it. Now, going back to the US again, there's obviously a very high risk of overreaching basically from the SEC right now. They might continue the enforcement method for a while, who knows, but once they actually apply regulation, it's probably going to be quite far-reaching. That's probably a likely consequence of all of this, because there's so many arguments as to why you would do that versus not, right? So that's like one aspect, but the more important thing beyond that is also like the way that like the whole exchange regulation is working in the US as well, doesn't really allow for like a native use of blockchain, because the architecture from a reg and legal point of view is such that you kind of have to replicate all the different types of constituents on chain or off chain or a combination thereof, and in the end it's like, well, this is just not efficient anymore. So it's almost like replicating a legacy structure onto blockchain, which really wouldn't make sense. So that kind of, I think the US is going to struggle from a multiple perspectives for those two reasons, right? And for us, it's more like, okay, we're like in the center of Europe. This is going to be passportable. MiCA is coming in 2024. It's all good. We kind of know what we're doing. We think that we will have like a great opportunity moving forward because of passportability and the EU kind of becoming, set under one regulatory umbrella. So
yeah.
So far, I think it's also fair to say that, this should not come as a surprise to anyone in the space that basically the regulatory drumbeat of engagement has been obviously increasing, becoming louder, more tangible, and things have been already put in place, regardless of actually the current fallout with FTX and Celsius and other players. But what's been done is actually also it allows actually for when proper regulation is in place, like we found in Germany in this case, there is actually a vision of a pretty big use case to actually use technology that blockchain actually presents to then actually have real world assets and real world asset use cases benefit from the technology. Yeah. So you almost are dependent on actually having a good set of clear rules, and maybe as a service provider, we and others are basically on par with the banking ecosystem to then actually be able to actually bring the full breadth of use cases that blockchain actually enables to a completely existent and maybe asset class that benefits tremendously for it. That is even outside of actually cryptocurrency regulation that may or may not come, and we all may or may not like it. But the result is that basically, I think we found different jurisdictions, and Germany is one of them, that actually are willing to take that position and are willing to give guidance and at least converge on a certain vision of how that should look like. And that is obviously very exciting, because we can suddenly see that, maybe a use case like FTX was exploiting is actually going to accelerate that to become more tangible, maybe more understood, maybe more clear in that context. And it allows for the space to advance quite significantly.
Yeah, I think a lot of the questions and concerns, I guess, our audience have at the moment is, how do I know that it's, safe to invest in some of the cryptocurrencies? I guess, where do you think?
Sorry, you said the cryptocurrencies, because it's also a question how you invest. Through whom you invest, right? Because I think the integrity of Bitcoin has been proven out, right? Regardless whether FTX or other things have happened, right? But now the question is, what do we expect an organization like FTX, who's obviously custodying customer funds and operating in a certain way, to have in order to actually have a consumer being able to rely on it?
Yeah. I agree.
Yeah, and I think you kind of like we've seen the volume increase of like wallet use over the last week, obviously, right? So people are pulling their cryptos off of whatever platform, pretty much. Yeah. And so we saw like an upswing both on the custody side as well as on like Trust Wallet and other kind of self-custodied applications. So I think that's kind of the immediate reaction. Yeah. But then it's like, okay, so once you've done that, okay, so now what? Like now I need to decide where do I actually apply my crypto to, and then so that's how we thought about DeFi being like the right architecture on how to do this, because it's not like me blindly sending my crypto somewhere else or my digital assets somewhere else. It's actually me applying my assets to a particular application that I think makes sense, and then once I don't think it makes sense anymore or for other reasons, I will just remove my assets from that application. I don't have to. So the whole kind of trustless nature of that is really important, right? Yeah. And so I think that's where we'll see a lot of growth. Now, having said that, it's a fairly complicated exercise, decentralized as well, because not all people can actually operate do all the self-custodied wallet stuff, signing transactions and actually knowing what you're doing and what's going to happen on the other side. So that's kind of where we're looking at okay, so how do we combine the self-custody architecture with hosted wallets that make it super easy to use some of the applications. And I think there's a lot of interesting innovation already happening there with 𝗕𝗓𝗪 and Argent and others that are already kind of trying to solve that. And for us, it's we've chosen to work with 𝗕𝗪𝗪 Safe, and we're trying to develop usability or ease of use around that framework to make it more accessible, because it is kind of daunting in the beginning to deal with this stuff. So
yeah, for sure. So future regulations. What are your thoughts with everything that's sort of happened recently? Far-reaching, I think, was mentioned earlier. What are your thoughts? Do you think it's going to be negative at first, and maybe a bit of stumbling until they get it right, or?
So I think the question is actually where, right? I mean, there's different approaches in different regions,
sure.
Right? And I think. America, as mentioned, has actually very much gone through enforcement or action by enforcement, and I think so far it's hurt actually a lot of the the projects that had to then choose other places because it was just not clear how they should act, and basically it forced other people to go, or forced the projects to go elsewhere. The question is now sort of, is that really going to happen in this term or the next term, that you're going to actually see beyond the enforcement by action, and you're going to see sort of stipulations come out that basically give that guidance? Highly doubtful. It's really a big question, right? If you look at the UK, you basically have existing FCA and regulation that leads into the sandbox. It might just be that the scrutiny of actually people graduating from the sandbox might actually be heightened, prolonged, whatever that means, right? But the goal there has not changed. The goal in the FCA context has been basically to qualify players to be on par with the expectation of what the financial system should deliver to consumers and protect consumers from that kind of malicious behavior. So, whether that process is really efficient to go through, that's a different story, right? And then you look at Europe, and Europe already has, and that was sort of appealing to us, it was, already going the extra mile to say, we're not going to put a sandbox concept in place, but we're going to put a stake in the ground saying, okay, we want people in production to be already in contact and trusted by the regulator. So with that in place, now the next step has come with the harmonized European regulation called 𝗕𝗓𝗪𝗔𝗥𝗘, which is taking effect in 2024, specifically around sort of cryptocurrencies, not securities. Securities are handled differently, right? So in some ways, this has already been forethought, right? So I would be surprised if Europe actually takes a different tact at this point in time, just as a result of current events. It might be that the next versions of that might actually have different regulations in place, but we're already in the full process of actually having a landscape that has to abide by these kind of rules, and actually the trust of the consumer should increase as a result of it.
Yeah, that makes sense. So if we move on to mainstream adoption, we love to talk about mainstream adoption with our audience. Whenever we see pockets of things that we're like, we see them sort of focusing future-proofing and that side of things. What are your thoughts on sort of mainstream adoption?
I think it's quite important what's going on now with a combination of, let's say, Twitter and Instagram and some of the other, obviously huge user bases that are already out there, and almost with those users starting to use blockchain or crypto and getting kind of acquainted with the space, but not really, because they don't it's a little bit like email. Nobody cares if it's POP or IMAP or whatever. I mean, it just happens, right? Yeah. And I think that's kind of the key thing here, because everybody that certainly doesn't need to understand what's going on behind or under the hood. So I think that's kind of where a lot of the volume is going to come from. So by those networks basically providing access to huge user bases and then coming in, whether it's via NFTs or other applications or just simple payments or what have you, that's basically where we see a lot of volume coming from. And then for us, we think that there's a great fit to actually work with a lot of Web 2 companies or even like fintechs and neobanks to provide, regulated crypto services or products into those user bases as well. Because, I mean, first of all, they kind of need to work with the regulated counterparties, but then also for us, it would take a lot of time to build like a 50 million person user base. It takes a lot of capital. They're pretty much already out there in many ways. So yeah, I think that's kind of partnering as well as kind of seeing the big networks coming into our space. That's what's going to bring like mass adoption.
So I think it's fair to say that basically sort of, until very recently, actually the reason to do a DeFi infrastructure was only evident to those that are in space for a long time, have become accustomed to the tools, that know what a MetaMask wallet is, etc.
Yeah.
I think given current events, it's actually put a spotlight on that and said, okay, so the use case about adoption being with centralized players that make an easy interface that that basically give me a good experience and to onboard me and actually get me into the process, it has some significant deficiencies. So now it's about actually simplifying this other world that has a higher degree of protection, but make it more usable. And so the wallet and the experience infrastructure is one piece, but it's also that if we really believe that Web3 is the disintermediation of, or the disassemblement of a stack, and the optionality that I get as a user, then let's actually put that to practice. Let's actually put that, to use to build products that are significantly economically better than what people have access to today, and still build it on an architecture that preserves that kind of security that is needed, right? So the next phase is all about that. It's actually nothing else. There's no new product line, no new asset class that we don't know of today that actually now will suddenly pop up. But it's about getting this kind of this nailed in some ways, right?
Yeah, I mean, we're very much of the opinion that sort of DeFi is kind of like the end game, right? Like you go, you've I guess from a Bitcoin sort of standpoint, right? DeFi, decentralized finance, no centralized player, self-custody.
Right.
How do we simplify it for those that are not in crypto now?
Well, so we have a different answer than what you probably expect. So for me, it was first of all an interesting exercise for us as an organization to go through actually explaining to regulators what that actually means, and to also give our position to the regulators what we want them to do in this context and what we don't want them to do. So preserving self-custody is a major thing, right? But what does that actually mean for a regulatory body to understand what it is if you trade against an AMM pool or a lending protocol? And what is that like? How do you put that into the box of existing understanding of what a financial market should look like, right? So it starts there, because with that kind of clearance, once you have that, you can actually simplify here and there, because you suddenly actually have the buy-ins of a regulator understanding that. And then you can work on wallet infrastructure apps that basically have a simple user experience, maybe abstract away sort of the necessity of every user, like doing a qualification of pools, or basically sort of not stepping into areas of DeFi that are sort of nefarious or not really understood what they do. Because we've seen, let's also be honest, like, the CeFi has had the major problems, but there's been numerous DeFi problems as well. So if you step into the wrong area on certain chains, well, good luck. It might actually be that there's a rug pull and you actually lose your funds too. So this is actually about the combination of trustless technology that is clearly qualified and understood from the security perspective how it works, combined with actually the acceptance that a consumer needs by regulatory bodies stepping in and saying this is okay with us, because that future-proof is the economic value coming out of it.
Yeah, I think it's also about like actually people understanding what it is that they're kind of buying or investing in. If we talk about financial products, then a lot of the stuff in the DeFi space is pretty pretty advanced, right? So it becomes like this, it's very hard for people in general just to kind of spend the time that's required to actually understand what it is that they're buying. And I think that's another thing, that you kind of need to understand how returns are generated and have some faith in that that's going to continue to happen or whatever. It's just like, because everybody cannot like do a deep dive on DeFi strategies and then, go all in on like degen yield farming and then understand what's going on, or even understanding like the lending platforms and how they operate and like all that stuff. So it has has to be like fairly simple in terms of like what's being presented and why you would like buy this versus that or whatever. I mean, I think that's kind of the packaging is really important, and then like the regulatory backing I think is pretty key as well, because otherwise who knows, like the stuff can just disappear overnight, and then it's like, okay, that was not expected, and then we're in this back, fast forward back 10 days, and that's kind of
I mean,
the recurring theme, so to speak.
Sure, yeah, we hear it all the time, people just taking people's words for it, that this DeFi protocol with like 1000% APR, and they've just like degened into it. It's shocking. It is really shocking. Anything else that you would like to sort of cover off today for the audience? Anything that you're working on in the background?
So I'll just say, I think that we're entering a very exciting phase where suddenly it's not just about replicating existing known instruments, financial instruments or other things onto the chain, but I think by actually like digitizing, there's a lot of new discoveries that we're going to have, which means there's a lot of new experiences in ownership and how to sort of use this infrastructure to actually give access to assets and experiences to people. That has not been possible so far. There's been a lot of theoretical talk about it, for sure. But we all, as an industry, had to work through all these different cycles to actually come to this moment where it's actually physically and regulatory possible, and that the tools have been advanced far enough to actually make that all an experience that people can understand. Because let's be honest, I mean, so far a lot of people are not engaging, not because of the fraud and distrust, but also because it's too complicated. I kind of feel that people might have that misunderstanding that everything that's going on with the likes of FTX is a blockchain technology issue, and it really isn't.
No, not at all.
This is a bad player in the space.
Someone told me recently, actually, that technology is bad behavior is technology agnostic. And whether you use DeFi infrastructure, CeFi infrastructure, whatever, it really doesn't matter, right? So you'll find areas where universally you can step into the wrong area. So the question is, how do you protect that?
And it's the counter behavior of why Bitcoin was created in the first place as a result of the global financial crisis, which was effectively like a collateral quality problem. So what was FTX? It was a collateral quality problem as well as a behavioral problem, obviously, or governance problem, whatever you want to call it. But it's like the antithesis, right? Because then it's like, okay, well, we started this thing to solve this problem over here, but it actually keeps recurring. And so it really has nothing to do with like the underlying ideas of like Bitcoin or anything that we're doing.
For sure. It's like it happens in traditional finance as well, right? So awesome. Anything else that you'd like to cover off?
No, I think that's it.
Thank you for joining us today.
Thank you.
Thanks so much.
So a big thank you to the team from Swarm for spending the time with us to do the interview. Lots to unpack there. Do let me know your thoughts and opinions in the comments below. If you enjoyed today's video, mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.